for our position without us having to do most of the work. Price started retracing, it tapped right into this 15-minute DPR. Alright guys, so let's break these two trades down. We'll be talking about this first long position that we took right here, manually closed before news, and the second partial that I will show you in the next tab. I don't have it marked on here to keep everything clean and clear for you guys. So as I think you guys remember, we took another long position after the news right here. So we will break down both positions. Now let's focus obviously on the first one, starting with the daily time frame right here. So what comes to the daily time frame, this is what we've been looking for. Right after since price took out this high right here and left this imbalance point right here, opening on this candle, price ran right into our round institutional type of a level, as we call it. And what we've been looking at was not a reversal or anything like that, was just a simple reaction to this level. So looking lower, what we immediately looked at was this imbalance, showing momentum, showing clear direction and everything else. But we simply didn't like how close it is, especially knowing that we have bullish order block that's right around the equilibrium of this daily time frame dealing range. So this is why I simply, based on how lower time frames looked like and how this whole daily time frame development looked like, I wasn't overly liking this tiny pullback right to this daily fair value gap and expecting for another continuation right after. Main attention went to the equilibrium and this 3 consecutive downside candles, which is just a one bullish order block. What price was simply forming right here from the lower time frame perspective, this whole triangle right here was a market maker buy model fractal. We identified our key areas, we identified the original consolidation. Price right here was building sell side of the curve and then it was building buy side of the curve. So for a proper sell side of the curve to form from lower time frames and what we were seeing on the 1 hour, 4 hour, 15 minute, etc., it was pretty clear that price is about to keep on dropping and keep on delivering that sell side of the curve until it finally bottomed out. And again, main key level that we were looking at as a potential catalyst was the open of this bullish order block right here on the daily time frame. That was very, very close from the dealing range. At that time, we were looking at this low and this high right here. So discount side was nicely aligning with the daily order block, but you can see that price just literally tapped it and then exploded to the upside. So our key catalyst area, key catalyst type of a PDA worked out to absolute perfection. And opening on this day right here, on the 20th of February, this is where we took our long positions. I don't think that I have to remind you what took place around this whole area. Just that one thing that you must be in alignment with the fact that you are simply looking at this daily time frame as a potential pullback type of a play towards the monthly bearish fair value gap, which is again right here, the low of this monthly bearish fair value gap is acting as the main drawn liquidity. And what we are basically seeing right here is a daily time frame market maker buy model, this being the original consolidation, this being the sell side of the curve, price bottoms out, key area, key level, the catalyst, VD ray being monthly bullish fair value gaps, consequent encroachment. This is the separating line right here, sell side of the curve, buy side of the curve. And from this point, what we are focusing on are the longs towards this level right here, which is original consolidation. And of course, the monthly bearish fair value gap right above. So this is a daily time frame market maker buy model in a pullback type of a setting, because this whole market maker model is not happening with the main weekly time frame and monthly time frame momentum. This is literally a pullback play from the daily time frame perspective. But again, what we have here is a pretty clean market maker buy model, again in a pullback setting, but this is exactly what it related for quite a lot of times first before engaging into these longs. We let price settle down, bottom out over here, and only then we started looking for long opportunities right here. So I think there's nothing else to really add on what comes to the daily time frame. They had a bullish order block, price gave an impulse after already bottoming out right here, started pulling back. They had our equilibrium discount area nicely aligning with the bullish order block, price tapped that and continued higher. So zooming towards the lower time frames, what we had was a full market maker model fractal right here, this being the original consolidation, this being the reversal point from the daily time frame bullish order block right here, and price continued higher. And this is where we look for our long positions right here inside of this day, which again was 20th of February. Now what comes to the 1 hour, I quickly want to switch it to the 4 hour first, just for you guys to have a clear vision of what we've been looking at right here. So ignore all of these drawings here on the left side. What we basically are pushing away from here, these 31st lesson type of structures, lows and price forms one, the aim for price to keep on pushing away from that area. Once price forms another low, this is going to get another dealing range, and we expect for price to keep on pushing away from these 31st lesson lows. So what we had here from full hour point of view was this strong low right here, was this high, and this blue rectangle here is our discount side, is our discount area. So we pair it with bullish beta race. On the full hour, we had this imbalance right here, this old imbalance. But from the 1 hour point of view, right in this full hour dealing ranges discount, what we had was this 1 hour BPR, bearish imbalance filled with bullish imbalance. So this was our clean area right in the middle of the lower time frame dealing ranges discount. Remember that right in this area, what we also had was daily time frame bullish order block, which was again one of the main key factors. And focusing on the 1 hour formation, overall what we had here was this original consolidation, sell side of the curve right here. This is the separation line, price bottoms out and starts building buy side of the curve. So obviously we are trading with the daily direction, with the daily momentum, and what we focused on right here on the lower time frames was again the buy side of the curve, looking for long opportunities, aiming for buy side liquidity levels that were formed inside of the sell side of the curve. So on this day right here, we were focusing on previous day's highs. Not sure why it says PDL. You should say previous day's highs right here. Then what we had was this very neat buy side liquidity pool. So trading this day right here, this was the main draw on liquidity, but we stretched our targets right to this buy side liquidity because it was just a few pips higher from that point. You can see around 8 pips above the previous day's high. So obviously final target for this trading day was all the way right here. So from the 1 hour perspective, I think everything is pretty neat and clear. We have this market maker buy model perspective. We have the market maker buy model on the lower time frames that's moving in the buy side of the curve of the daily time frame market maker buy model, which is again in a pullback setting. So now this was our long candle right here. Notice that what happened right after the near midnight open, price started pushing higher, leaving pretty clear lows from the 15-minute and execution time frame point of view. That's not that visible on the 1 hour time frame, but overall what we already had was this low right here. So we were trusting this to be as a potential low of the week, which is Wednesday. Very often we see Tuesday or Wednesday. At first, right after the New York midnight open, what we were actually looking for was for price to run this sell side liquidity right here, and we had this BPR, this bearish imbalance filled with bullish imbalance. So what we ideally been looking for in the morning right here was for price to run the sell side liquidity, run into bullish lower time frame PT race and start shifting higher, leaving London kill zone low of the day. And this is where we would have been looking for near till zone continuation towards our main draws on liquidity right here. However, we didn't get that. Price kept on consolidating right here, and then it started building pretty clear structures and clear London kill zone lows, but those were visible only from the 15-minute point of view and execution time frames. From the 1 hour perspective, this was the entry candle right here. Notice that this candle prior to that ran some sell side liquidity. The previous candle right here that reacted to the Asia range highs. When price re-stacked, it retraced, left another long on kill zone low, again, which will be very nicely visible from the execution time frames and 15-minute, and then started pushing to the upside. So we had some turbulence right here. When price reached into this bearish fair value gap on the 1 hour time frame, notice that it gave the London lunch pullback, but eventually started climbing to the upside. So now dropping on the 15-minute time frame, this is what we had right here. And you guys know that we want to have clear, strong lows and structures that we could start yielding away from. And this structure wasn't it. This was still the first long down kill zone type of a low right here, which happened at 2 a.m. Then eventually what we saw was this tiny BPR on the 15-minute time frame right here. So notice that price rejected it to the downside, ran some sell side liquidity, formed this low and started pushing to the upside, breaking right above this 15-minute BPR. So this is where it caught my attention, because what we had was another potential long on kill zone low, price running sell side liquidity and expanding to the upside, taking out highs. So from this point, what we had were two bullish structures that happened during long on kill zone. Price broke above this BPR. So from this point, obviously they start using it as potential support. And this is your from the 15-minute point of view, our entry happened. Price expanded to the upside, and on the pullback on this candle right here, notice what happened. Price started retracing, it tapped right into this 15-minute BPR, gave us the execution time frame entry and started expanding to the upside right here. So this is where our entry happened. Unfortunately, notice that it happened right after the London kill zone. However, as we had everything in place from the daily time frame to the lower time frames to execution time frames, we've been looking to take this trick for a long time. These are those type of situations when we don't mind entering during the long down lunch as well. Obviously, if this would have been a simple risky scalp type of position, we would have just skipped on this trade. But as mentioned, as it was a high probability trade, entry happening during the London lunch wasn't a red flag. We entered the position. However, obviously you can see that we had to survive some heat. This is where right here price reached into the extension, reached into this 1 hour bearish fair value gap that I mentioned, and as you guys know, very often price during London lunch gives a deeper pullback, and this is exactly what happened. Notice that price gave a deeper pullback. However, as we had our stop loss pretty much very close or this second London kill zone low, where we already had bullish order flow signs again pushing away from this low, as this was the last low that ran sell-side liquidity, the last strong low. Obviously, we wanted to cover that, especially as our entry happened during London lunch, and we are not sure if price is going to give that deeper pullback that it usually does during London lunch or not. So this is why we went with a slightly wider stop loss, and that was a right thing to do. Price pulled back, and notice where it stops again, projected this DPR to absolute perfection one more time. It bottomed out right here and started pushing to the upside towards our targets. So what basically happened? Obviously, near kill zone volume, near kill zone momentum kicked in, and price started climbing towards our targets right here. So dropping to the execution timeframes now, this is what took place. This was our first low right here that we didn't trust, obviously, even though price ran some sell-side liquidity, but it wasn't anything major because this was just a simple low, simple structure from mid of the Asia range. Anyway, price still ran this structure during 2 a.m., but notice how tiny this sweep was. If this would have been a massive wick right here and then price would have pushed higher with strong momentum, this would have been a slightly different story, but in this case, it was a very tiny sweep, if we can even call that. So obviously, we didn't trust this 2 a.m. low right here. Price pushed higher, rejected this inverse fair value gap right here, kept on pushing to the upside, took out Asia range buy-side liquidity right here, and then reacted to the downside, forming this very clear bear trap right here, running buy-side liquidity, running sell-side liquidity into bullish beta race, and then kept on climbing to the upside, which is where we saw this second London kill zone low right here at 4:40 a.m. Price ran sell-side liquidity into bullish beta race right here, expanded to the upside, took out London kill zone buy-side liquidity, and by this point, what we already had, again, there are two London kill zone lows. So from the 15-minute point of view and execution time frame point of view, what we had was bullish delivery, bullish order flow. So this is where we had lower time frames and execution time frames nicely aligning, and this is when we can start looking for potential entries. So once price started pulling back, what we had right here was this tiny bullish order block. Remember that price right here also tapped right into the 15-minute balance price range. So this was another massive additional confidence factor why I took this entry a bit earlier, not waiting for a deeper pullback. Let's see if focusing on an OT level right here. As we had that sensitive 15-minute balance price range, we had this 5-minute bullish order block aligning with it as well. I didn't wait for anything else. Price retraced, I entered, putting a wider stop loss in case price gives a deeper pullback, which eventually did happen, as you can see right here. But at first, everything looked very nice and clean. Price started pushing into profit, but then again, price reached right into the 1 hour bearish fair value gap. It started pulling back, though that very likely price is about to take us out right here. But the whole delivery, the 31st lesson type of a structure right here that we want to push away from, and obviously cover with our stop losses as often as we can, stayed in place, and price started climbing to the upside. So now why I manually closed this position right here is because we had 8:30 high impact dollar news. So as you guys know, I always close my positions manually before red folder news around 15 minutes, 10 minutes before the announcement. So this is exactly what we did, where I started pushing to the upside, and this is where I fully closed my position, waiting for news to be out of the way. Now talking about the extensions, Asia range durations, and everything else, how we came with all of these targets and all of that. This was all the stuff right here. Asia range durations, this is where we use Fibonacci tool right here, simply measuring the range and applying them right here. And what comes to the extensions, this was the first expansion to the upside after leaving this low right here. So this is where we had our extensions. Now, as you guys know, I like to align everything and see which points, which bars are nicely overlapping. So this is where we had this area right here, but obviously it was too close from our entry as it was a trade based with the daily time frame direction, with the daily time frame stage, which was bullish. Obviously, I wasn't too aggressive with my management. I let price play around right here, and my first risk removal was right here. However, obviously we closed the trade manually, but if let's say we would have let the trade run all the way towards our targets, as you guys know, I remove risk around 1.5 R. So in this case, it would have been around 1.8 right here because it was nicely aligning with extension. So as always, I stat on funds factors. So this would have been the area at minus 0.5, which is also pretty close from 1.5 R. And in this case, they would have removed most of the risk, probably just somewhere around here or even here. Why not fully? Is simply because he had this bullish order block right here. So if we wouldn't have that, obviously we would have fully removed risk, but in this case, it would have been simply not smart getting tired out before price continues higher. Again, as it was a day trade, not a scalp trade, but a day trade with the daily time frame backing our vision. This would have been our first partial area right here, which is again our second confluence area that was nicely lining up. And I'm talking about this -1 Asia range duration with this -0.75 extension right here. So as you guys know, I choose the lower one. So my first partial would have been at this point right here. This being the second partial, that was the main drawn liquidity, -1 extension right under the previous day's buy side liquidity. So this is where I would have been almost fully out of my position, leaving the rest to run towards the final target, which is the lower time frame massive buy side liquidity pool that we talked about. Again, as you guys know, I aim a little bit lower, not right on the level, because of spreads and absolutely everything else. Sometimes SMT price on the XI just takes out the level, but Euro fails, comes very close and drops lower. And this will be a very great example what comes to the near kill zone continuation that we took. So regarding this first entry, regarding this first trade right here from the 20th of February, this is where we took it, and this is the whole story behind it, the whole management and everything else. So now let's switch to the second entry, to the second near kill zone continuation that we took later in that day. All right, so from the 1 hour point of view, this is where the trade happened. Notice that what we had was this bullish order block right here. Price also ran above this 1 hour fair value gap that has first caused reaction, then price climbed above it. So even from the 1 hour perspective, if you would really zoom in, price was bottoming out. We're here to give another near kill zone continuation, especially as we had long on kill zone low of the day. So this was absolutely perfect and exactly what we looked for. We expected for the bullish daily time frame formation for a bullish daily candle to happen. We call it bullish daily stage. And obviously what we usually want to see ideally is a classic buy day, London kill zone low of the day, near kill zone continuation. And this is exactly what we saw. So from the 1 hour perspective, it's pretty clean and simple. Nothing else to add right here. What comes to the 15-minute time frame, this was the view right here. From the 15-minute perspective, remember again, price formed this London kill zone low right here. Then we had another London kill zone low. Price took out this high. Then it took out this high. So what we had overall, we are two lows that ran sell side liquidity and took out buy side liquidity. So we had two strong London kill zone lows that we wanted to push away from. Then during near kill zone, price bottomed out right inside of this DPR right here, this perfect development, and gave another expansion to the upside. So in this case, as it was right after the high impact news, what we obviously highlighted for ourselves was this 15-minute fair value gap right here. Price dropped right into it, started showing bullish reactions, and this is where we switched to the execution timeframes, looking for our potential entries. All right, so from the execution timeframes, I think you guys remember this -1 extension that we had that was right under the previous day's highs, the main drawn liquidity. So as mentioned, I always take my profits a little bit below, especially if we have extensions or deviations or any other clear areas lining up with that whole thinking process. So again, once price during the near kill zone bottomed out right here inside of the 15-minute bullish fair value gap that we just talked about, noted that price ran some sell side liquidity, left this low right here, then took out the high. What we had here was the strong low that we wanted to start pushing away from. Price gave expansion, pulled back into this bullish order block right here, and started climbing to the upside. So this is where I took my position with the stop loss covering the most of this strong low right here from the execution time frame point of view. So looking higher, what we had was this at that time near till zone high right here, buy side liquidity, but again, it was too close from the entry to take any partials or even remove risk. So obviously what we did, we focused on this area, on this level that we focused with our first position. But obviously as we closed our trade manual before the news, this stayed as the main target for the day. So entering this near kill zone continuation, the main partial point, the main area was again same level right here. So notice how price literally just tapped into it. My alert was hit. I took out most of the profits, moved stop loss above my entry point right here, and after that, after banking profits, moving stop loss to break even, this is when they got tied out of the position, and this is where I closed the charts, stepping away from the screens for that day. So obviously that was the decision, especially as Irish SMT was already kicking in. So I didn't want to find out how deep price is going to pull back or anything like that. And right here, obviously we were out of our kill zone, so I wasn't looking for any further continuations. I already took two trades, one right after the London kill zone, obviously not ideal, because ideally we wanted to see entry happen inside of the London kill zone, but sometimes this happens and we have to simply adapt to the situation. And what comes to this near kill zone continuation, it was very neat and simple. Price continued after rejecting this 15-minute BPR for a few times again. It bottomed out, gave a continuation, pulled back into bullish 15-minute fair value gap, gave another expansion. This is where we zoomed in into the execution timeframes. And as price was rejecting this bullish fair value gap as well as this inverse fair value gap right here, started pushing to the upside. This is where we entered, fully covering this low right here, looking to bank our main partials right here and move stop loss to break even and then be either taken out or see price run towards our last targets. So for this position, I would have banked another P2 because of the SMK and everything else, which is something that I pretty often do. The midpoint from T1 to T2. So this is where everyone have banked second partials, leaving small piece run towards the final target right here. But obviously we didn't have to do that because we got taken out after taking first partials. So overall, happy with the trade. We took out quite a lot of profits. Obviously, it wasn't the most ideal type of situation because if not the news and all of that stuff, obviously entering, let's say, from the 15-minute point of view with a similar entry right here as price was pulling back to tap into here, covering with the stop loss right here, pushing towards our main target, notice that this would have been just a very neat and simple for our position without us having to do most of the work, taking partials, removing risk and all of that. But again, this is something that you can do if you have a swing account. I personally do trade a smaller swing account, but my main one is day trading because especially the continuing members, you guys see how often we bank some nice partials, bank some nice profits and be out of the position no matter if the rest of it plays out or not. These type of partials that are based on specific areas, specific developments that we predefine beforehand, aligned with everything, type on funds areas, etc. This is where this day trading shines because all of these trades really add up. All of these profits really add up. And this is where we don't have to stress if the trade is going to run right at our fixed, let's say 3 or 4 hour target or not, because most of the time we still end the day green with some neat profits. Sometimes it's a bigger move, sometimes it's a smaller move, but overall, these positions that don't go to the full target still add up very fast. And this is why for my scalping and day trading approach, I do things that way. So hope it was insightful, covered everything that I wanted to talk about today regarding these two positions, and we will talk very soon.